Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a special trading session on Saturday, and we are live with you. The pre-opening trades will just hit our screens and we will get to know how the markets have opened in trade. Of course, this entire series has begun on a robust note because yesterday's session was a historic one. For the Sensex, for the Nifty, they hit record high levels. The Nifty did close above record closing highs of 22,300 as well. At close, the Sensex was up 1,245 points or 1.7% higher in trade, and it ended the session at 73,745. The Nifty was up 356 points or 1.6% higher to end the day at 22,338, the best closing so far that we've seen in 2024. Now, of course, on March 1st, the Bank Nifty was big outperformer. It rose 1,166 points or 2.5% in trade to close about 47,287, forming a robust bullish candlestick pattern on daily charts as well. What is also positive is that global handover is also positive for us. So the Nasdaq hit another fresh all-time high level. The S&P 500 closed above the 5,100 mark for the very first time. And the Nasdaq Composite reached a new high on Friday, surpassing the 2021 record as well. Investors believe that the mega cap technology stocks were the best way to play the slowing inflation story and the upcoming boom in the artificial intelligence that was best seen in Nvidia's stock market value that closed above $2 trillion for the very first time in the overnight trading session on an upbeat report from Dell Technologies that reignited Wall Street's AI-fueled rally as well. Following this, the Asian markets ended the week also on a positive note as well. As far as the FII flows are concerned, again, the net bought shares worth about 128 odd crores, while the domestic institutional investors purchased about 3,814 crores worth of stocks as well. And of course, the macro data is also supporting the market sentiment. After the big pump that we saw from the GDP figures day before yesterday, we also got the GST figures of 1.68 lakh crore rupees, also adding more buyer as well. That's the entire trade setup like. Let's now welcome our guest on the show. I'm now joined by Mr. Kiran Jani, the head of technical research at Jainam Broking, on this very special Saturday trading session. Kiran, how does it feel, and what is this unusual Saturday really going to bring in for us?
Yes, very good morning, everyone. But we already had one practice day in January 1. So we are in practice that nowadays Saturdays are also coming on special days. So we were prepared about this day, definitely. Now, as you highlighted, multiple reasons and multiple cues for the market to become a bullish. So domestically and internationally, there are two types of cues we are heading now. If you check about the US and Dow Jones, Nasdaq, everywhere we are seeing that rate cut things are going on, and that's the only reason Nasdaq and Dow Jones are holding its higher low, higher bottom pattern. It is trading into the rising channel only. Now coming to the Indian market, we have seen the last week of February quite nervousness, but yesterday the first day of the monthly expiry of March month. But before that, we had our GDP data, and it was historical high. And that was the only reason we have seen yesterday the furious rally. Market participants are cheered about those data and everything. So today is the one special session. So we are not expecting any kind of a big rally, but if you check about those data and everything, so cash market yesterday, we have not seen any excited number from the FIIs. FII only bought 128 crore, where we can check about the derivative data. On derivative front, we have seen that FII took 3,000 contract on long side, and on short side, we are seeing that 7,000 contract is fresh addition. However, it's just in start of the monthly expiry. So this data is not adding any significance. The major thing what we are liking into the data is the put writers data. Put writers added 5,65,000 of open interest on lower side and even at the money. So that is giving a more confidence that now market is give a breakout from its previous trading zone, and we are heading for the new targets like 20,000, 22,600, 22,800. So coming to the technical setup, market was trading into the one range, and there was a cluster resistance of 22,200 to 23,300. Yesterday was the weekly close, and weekly close came at all-time high, also above the that resistance also. So it's given a very significant confidence into the major participant. So our view is very clear and cut. We like to go long only. Wherever dip you are seeing somewhere around 20,100 to 20,150, that is the buy support or accumulation zone. We are expecting the target of 22,600 to 22,800 during this month. So it's quite a long-term target we are giving for this month. Coming to the Bank Nifty PCR ratio is trading at 1.39. It is quite overbought zone. So there are chances we can see some of the fall is coming, and that fall should be used for the accumulation zone only. So as of now, Bank Nifty chart suggesting that 46,800 to 47,000, it's a very good support. Any dips toward 47,000 would be the great opportunity to enter into the market. Bank Nifty already underperformed to the market. Nifty is trading at all-time high, whereas Bank Nifty is still below its all-time high. So there are chances that catch-up rally will come. And yesterday we have seen similarly, Bank Nifty was up by more than 1.5%. So there are chances that this kind of a move keep coming until and unless that both index will be at par. So we are quite bullish on Bank Nifty. Any dips toward 47,000 would go. We like to go long. Our initial target is 47,800. And as soon as 47,800 breakout, because there is a gap resistance over on daily chart. So that's why we are giving a small target of 47,800. And as soon as that particular level crossed, we can see 49,000 kind of a level also. So we are quite bullish on Bank Nifty. Any dips towards 47,000, it would be the great buy.
Okay. And let's also welcome our other guest on the show now. Raghavendra Singh also joins in. He's the market expert who we have regularly on our shows as well. Good morning and welcome, Raghavendra. I was just beginning to ask Kiran as to how does it feel to be working on a Saturday morning and tracking the markets again. And one day loss of a weekend is what we are just struggling to deal with at this point in time. But jokes apart, what are the market do's and don'ts for this special trading session? Of course, we've talked to all our viewers and we've told them that's going to be two special trading sessions, that from 9 a.m. we've already started to get some of the pre-opening trades, and the Nifty is again at record highs in the pre-opening trade again. We've also seen 22,400 being hit on in the pre-opening trade already. So definitely some of the positives coming in there. But 9:15 to 10 will be the first session. Then 11:30 to 12:30 will be the second session. What is the strategy that you would recommend and the do's and don'ts for today's special trading session?
Very good morning, Sakshi. First of all, I would like to tell you that we have seen almost 1.5 crore of open interest on the put side in Nifty and Bank Nifty, Nifty especially, and almost 60 to 70 lakhs open interest on the put side in Bank Nifty. That means that we are heading towards in the new zone of 22,000, 23,000 level, and Nifty can give almost 500 to 700 point rally on the higher side in coming days as far the open interest is concerned. Secondly, I believe the kind of rally we have seen in the heavyweights like Reliance, ICICI Bank, Tata Motor, M&M, I think this kind of rallies in the heavyweights are indicating that now the interest of the FIIs and the big players are shifting towards the new stocks apart from the mid cap, small cap. And that is giving me confidence that Nifty and Bank Nifty both can outperform in the month of March with the almost I believe 3 to 6 point rally on the higher side. See, technically on the chart side, if we see the Nifty has given flag pattern breakout on the monthly chart, and the higher and the triangular pattern breakout on the daily chart, which means that the next target is around 23,000 level very soon.
Okay. Let's also now discuss some of the stocks that are in the stock to watch list, and we will be taking both our guests' views on those as well. So Paytm is again going to be in focus because Paytm's payment bank has been imposed with a penalty of 5.5 crores for violating the money laundering norms. That's one news that is again going to be perhaps a big dampener. Kiran, to you on Paytm, we did see a 5% upper circuit yesterday. And again, the volatility continues on this stock consistently. This is with one day positive news, one day negative news kind of impacting the stock. How would you really look at Paytm now, and what would be the advice? Because a lot of investors are feeling stuck with this stock now.
Right. So as you mentioned, this talk is all about now news. Every day we are hearing some of the positive news and some of the negative news. That's the only reason we have seen a higher volatility in particular stock. The stock in a week we are seeing there are 2 3 days upper circuit, there are 2 3 days lower circuit also. So for a fresh investor, we would like to suggest that stay calm, wait and watch. Let have some structural changes in company. Let's have some structural changes on technical front also. As of now, whoever is holding, they has just need to keep a strict stop loss of recent bottom of 300. If that level goes breakdown, sorry, then there are chances we can see particularly more downside. As of now, we are seeing previously stock price has made a bottom of 450, and after making that bottom, we have seen a furious rally to 1,000 rupees. So 450 will become a steep resistance as per technical chart, unless and until market is no, I mean BTM is not crossing 450, we are not advisable a fresh buy. Whoever is holding this particular short, keep a 300 as a strict stop loss. Stop loss is quite big or quite deep, but as we are seeing multiple news are coming, so we have to bear with this volatility. So whoever holding, keep a stop loss of 300. Fresh buying would only advisable if stock price is crossing 450 level. Once the 450 level cross, then there are very good chances that multiple gap on daily chart can be filled. So as of now, Paytm is trading its about 20 days moving average. But at current market price, we are not recommending any buy. Conditional buy would be about 450 only, and that is a pure technical call. It would be a high risky call. Buy above 450. Once price crossing 450, you trail your stop loss from 300 to 400.
Okay. Let me ask you, Raghavendra, on the other stock that is in focus today in the news list, and that is Geo Financial. The company has now been added to BSE all cap and large mid cap indices in a major rejig. The changes will be effective from March 18. How do you look at Geo Financials as of now, 319 currently in the pre-opening trade?
Sakshi, Geo Financial are looking very good on the chart. I believe this is stock we have recommended on your show at the rate of 250, 260 levels, and then 200, 220 levels. Now we are again recommending this. We are suggesting our investor to buy on this stock, accumulate this at every level. Immediate target we are expecting 350 plus, and apart from that, the long-term target after 6 to 8 months, I believe this stock can touch 400, 450 level. So stock is looking good. The new investment is coming in after this announcement, I believe, almost 20 million and something like that. And I think 350, 360 is the immediate target for that.
Okay, fair enough. And the Nifty and the Sensex have settled in the pre-opening trade, and that's at record high levels. 22,407 is what the Nifty has settled at. So that's a record high level that you need to track. The Sensex also has settled at record high levels as well. So we will track. 3 minutes to go for the markets to open, and we'll keep a tab. But let's discuss some more stock ideas as well. Torrent Power is a stock, another one that is in focus in the stocks to watch list today. This Gujarat-based power company has actually received a letter of award from Railway Energy Management Company to set up grid-connected renewable power projects with or without storage, with a supply of 100 megawatts round-the-clock power, and the project cost is around 2,700 crores. Kiran, to you, we have been seeing this entire power space being in the hot spot, and of course, all the investors have lapped up on every opportunity which is coming in the wake of renewable energy, solar power, or maybe the power distribution and generation as well. And most of these companies have had a good run, and the awards continue. What do you really make of the entire sector and Torrent Power per se?
So overall, if we check about the power companies, there are three types of company: power, EPC, power distribution, and power generating company. As of now, we are discussing about the power distribution company. So we are liking two stock. First, let's discuss about the Torrent Power. We are seeing that stock price is trading into the heart of high bottom pattern. Recently, there was some correction part came, but stock price has taken a very good support at 20 days moving average. And now again, it's trading into the heart of high bottom pattern. Yesterday, we have seen a bullish reversal candlesticks pattern on daily chart. And today, if prices crossing its resistance of 1140, then there are very good chances that we can see some good rally in particular stock, and we are expecting 1200 kind of a target also. So again, here is conditional buy above 1140 for the target of 1200 and keep a stop loss of 1120. Now another power distribution stocks which we are liking, that is an Adani. Adani Port is into the rectangle pattern since long time. We have seen that since December month price is not crossed this 580 level. And every time after touching a 580 level, we are seeing market is making a low, but those lows are higher lows. So clear cut ascending triangle pattern is panning out. Stock price momentum indicator it is into the neutral zone. However, we have seen a bullish hidden divergence being plotted. So we are expecting a good amount of rally should come in Adani Power. So at current market price or at if prices is crossing 580 level, then you can add more also. So at current market price, you can go long. After crossing 580, you add more. Keep a strict stop loss of 520, and we're expecting target of 650, 680 in upcoming time. So if you are planning for 2-3 months kind of a holding, definitely Adani Power and Torrent Power both are the preferred choice.
Okay, a minute to go for the markets to open. Raghavendra, 2 stock ideas for today.
Today, I think REC is looking good. We have seen good rally on higher side, and apart from that, LNT. LNT is also given a very good breakout above 35, 3600 level, and I think the stock can continue the momentum till 3700, 3800 level. So these two stocks are looking good.
Okay, Kiran, to you. Quickly, if you can tell us your stock ideas for today as well.
So we are coming with the 2 ideas. One is the JSW Steel. We can see there is a ascending triangle pattern breakout on JSW Steel daily chart. So at current market price, we would like to go long on JSW Steel. We are expecting target of 855 and stop loss would be 814. So this is not a today only intraday call. You can carry forward this call also. And another call is the TCS. We have recommended on Wednesday also. It achieved our target. However, we want to re-rate this particular stock again. So at 490. Again, 4090 level TCS is trading. We would like to go long for the target of 4150, and we should like to keep a stop loss of 465. So JSW Steel and TCS both are the buy calls.
Okay, the markets have also opened, and it's a record high, ladies and gentlemen, on this special trading session on a Saturday as well. So you have seen the Nifty open at 22,392 odd levels. So 0.25% of an uptick is what you see. The mid caps are roaring higher. 0.5% of gains can be seen on that one. The IT space is 0.5% higher in trade. So that's where the push is coming from. The Nifty Bank is at 47,325. So just 0.1% uptick that you can see on this. So surely it's the broader markets that are actually supporting the market sentiments. But for sure, celebrating the auto space, 0.5% higher in trade. The metals pack that is shining bright second day in a row, 0.5% increase for this one. FMCG index also up by 0.4%, 0.3% odd as well. A strong move coming in across the board. Pharma stocks have recovered from yesterday's losses. 0.5% of gains coming in on this pack. The oil and gas space, about 0.2% higher in trade. 0.25% now. Uptick on the oil and gas sector as well. The capital goods space, 0.5% higher. Power space, about 0.3% higher in trade. And when we talk about the advanced decline ratio, that also shows a positive move at this point in time as well. The small cap index is also moving up now, 0.5% higher, 16,144 currently for this one too. So that's the opening as far as the index level is concerned for the markets. A very strong move coming in across the board as well. Let's look at some stocks. So NSE advances in 1996 versus declines of 1,053 stocks as of now. But the Sensex also at record high levels, 73,877. It's an all-time high level across the board that you see for Sensex and the Nifty for sure. And we will be continuing to see how the markets really move into shape as well. Dr. Reddy is moving up 0.7% higher in trade as of now. Info Edge is down 2% odd currently. Let's look at some more stock ideas. Bajaj Finserv is down in trade. Kotak Mahindra Bank slightly up in trade. LNT is moving up in trade as well. So those are some of the stocks that are moving up. Any a view on the opening, Kiran?
So looking at current market price as expected, market is trading into the height of average pattern only, and it is opened at the all-time high. So we would like to wait and watch as it is a special session. There might be chances a lack of volume also. So we don't want to chase this particular gap up, and whatever stocks we have recommended, we just want to highlight those stock only again. So you can see metal sector. We already discussed about the JSW Steel. You check Tata Steel. It is have a very good opening also. So if any dips come somewhere around 150, 149, it would be the great buy on Tata Steel. You can also check IT stock. We are liking TCS already we have discussed. So
Yes.
on large cap side, Wipro we are liking. So in case of
Yeah.
Wipro, any dips towards 520 or even at current market price, anyone can go long. Keep a stop loss of 514, and we are expecting price target of 550 in upcoming time.
Okay, Raghavendra, to you, a lot of auto IT names, pharma names coming up in flavor. So we do have stocks like Hero Moto, Tata Motors, them driving the in the front row, Aisha Motors as well. From the IT pack, it's again Wipro, TCS, Tech Mahindra, HCL Tech, LTI, Mindtree. These kind of stocks are pulling up the markets. L&T you had mentioned as a top stock of your choice, a percent higher for this one as well. In trade, Divis Laboratories, Cipla from the pharma pack is also pulling up in trade. How would you look at the opening? Any particular stock that you've got attention in?
MCX is looking good, Sakshi. MCX is looking very good on the chart. I believe the stock can touch above 4,000 level very soon. Apart from that, IRCTC has taken a strong support at 920, 925. The stock has potential to cross 1,000 level again, and I think MCX and IRCTC both are looking good. Both can buy.
Okay, so MCX is something that you will be tracking at this point in time. Let's also pull up Paytm and see how that stock is also trading because we had talked about the news flow of Paytm's payment bank attracting the 5.5 crore penalty. So let's look at how that one is moving in trade as well. PCR, if you could pull up the chart of Paytm and show us the price chart as to how that stock is reacting to the news flow. And we will also look at Geo Financial Services that we had looked at as well, a percent down. So 418 currently. Let's also look at Geo Financial Services that we had looked at before the markets had hit open, and we were discussing the stock too, about 0.6% higher in trade. Let's look at Torrent Power as well and see how that stock is reacting to the news flow of the letter of awards that the company has got. 4.7% higher. Very strong move coming in. Raghavendra, on Torrent Power, how would you really look at the strong move?
Torrent Power, the stock has given a triangular breakout on the higher side on the daily chart, and the stock is trading at the strong oversold zone with the RSI statistics on the lower side. So I believe the stock has potential to touch much higher level from this level. So this stock is looking good, and I think 1250, 1260 level should come very soon.
Okay. You know, the other space that has recently started to get some attention again is the paint space. And Kiran, I wanted your view on this. You know, Asian Paints, of course, has received a letter allotting 166 acres of land at Madhya Pradesh for setting up a paint manufacturing facility. We also saw Berger Paints moving in the last few trading sessions as well. How are you looking at the current move in the paint segment? It's coming after a long haul.
So looking at paint sector, we have seen that Asian Paint was a leader, or in case is a leader, undisputed leader. However, we have seen that multiple companies are coming into the paint sector, like JSW Group. You say Grassy Group is also coming, and for that reason, we have seen a drastic fall in Asian Paint. However, if you remember on Wednesday again on show, we have discussed about the Asian Paint, and we suggested that last year, same time, on during March and February, the stock price has made bottom somewhere around 2700 and 2750, and that would be the accumulation zone. And we have seen that stock price last 2 days, stock price has made low or a bottom somewhere around 2770. Now yesterday's candle is a clear cut reversal candle, that is a piercing line bullish candlesticks pattern. We have seen a bullish divergence on daily time frame on momentum indicator also, and a blue chip like this and this kind of a hidden divergence or a bullish divergence is a trick to buy. So again, last week or last Wednesday also, and even today, we would like to go long at on Asian Paint at current market price. Keep a strict stop loss of 2700, and if we are ready to hold for next 6 or 8 months, you will definitely see somewhere around 3000 to 3200. So we are quite bullish on Asian Paint. We already recommended our client also. So keep us 2700 as a positional stop loss and keep accumulating at bottom.
Okay, let's also welcome our rather special guest on this note. Abhishek Basu Malik is now joining us. He's the founder and chief equity advisor at IntelSense Capital. Very good morning to you, Mr. Basu Malik. Good to have you with us on a Saturday on Business Today television as well. Should we start to get used to of this Saturday working? It's happened second time this year already. How would you really look at this new phenomena?
Good morning to you and all your viewers. I sincerely hope not. I mean, 5 days a week is pretty much enough. I am not in favor of having Saturdays and Sundays also, being spent on the markets. In fact, I'm not in favor of extending the timelines of the markets as well, which is also something that is getting discussed all the time.
Huh.
Uh, I think we are good as we are. I mean, morning to afternoon,
What is your
good
usual
setup.
Saturday like, Mr. Basu Malik? And what has been spoiled sport? Tell me.
I mean, usually it's just doing the same old stuff, reading, research, uh, you know, go out to play
Okay.
tennis a bit. That's pretty much it.
Wow. Okay. I hope the markets will make up for it. We're already seeing record high levels, on this special trading session as well. Tell us, what is your own sense of the market setup right now? Just about a week or 10 days back, when we were seeing a slew of consolidating kind of days in the markets, it seemed like perhaps the best of the market run up is now behind us. And then comes in the strong macro, which nobody had expected, be it in the form of GDP or the continued, GST collections as well, and of course the added-on fillip from the global markets as well. How would you really look at the markets right now? Because now we are approaching the big general elections in just about a month or two from now. How do you expect the markets to really move forward from here?
So, first thing, I think it's very important to uh, sort of all understand that we are at an all-time high, which is always going to be a place where people are going to be jittery. So you will find a lot of volatility on a day-to-day basis, week-to-week basis. Uh, People will be very quick to uh, you know panic on a day or 2 days of fall. People will again become exuberant when things change with some sort of numbers coming through, whether it is GDP, whether it is FII flows or something or the other. So people will be latching on to small things, and there will be a lot of volatility. So I think we have to get used to a lot more volatility. Overall, I think, if I take a longer term view, obviously India is in a very good sweet spot. Short to medium term, I would be a lot more circumspect. Uh, I mean, most are running uh, on narratives, not a lot of earnings coming through, as which is commensurate with the stock price movement. So that is something that we need to be a little bit careful of. I'm not suggesting that we need to be bearish or anything, but you just need to be careful of the kind of stocks that you're buying, and you should be comfortable holding on to stocks in short sharp reaction downwards if and when it happens.
Okay, fair enough. We will come to you for several sectors, themes, and more stock ideas that we are looking at as well. But let me bring in, Raghavendra now into the conversation. With Kiran, we were discussing on the paint sector. The other sector that's finally starting to also move is the consumer durable space as well, Raghavendra. So stocks like Havells, Voltas, V-Guard, for example, they are making a comeback again after some time. How are you looking at this fresh move here?
Sakshi, we discussed about Havels, I think, in last week,
Yeah.
around 1300 level and 1250 levels. The stock has given a very strong breakout on the higher side, and the option data was also suggesting that stock can move much higher level. Apart from that, Dixon Technology is looking very good on the chart. That can be a good stock to buy, and I think these two stocks are looking very good on the chart. And apart from that, L&T is also, as I mentioned, that L&T has given a strong breakout. So these three stocks are looking very good on the chart. We can buy this one.
Okay, fair enough. Kiran, to you now, how are you looking at the entire banking setup now? We did see a strong outperformance from the Nifty Bank. Private banks like ICICI Bank, HDFC, Axis, Kotak, all of them starting to move finally. Do you still feel there is merit in this move that could be sustained, or this is just like a few days move? And how would you be advising investors to look at the private banks and the large private banks currently, which have thus far disappointed?
Yes, definitely. So as we discussed in morning also, if you look at the Bank Nifty is still underperforming. Bank Nifty is trading below 2.5% lower than its previous all-time high, where Nifty is trading its all-time high. So that catch-up rally should come. Now in this catch-up rally, whether PSU Bank will perform or a private bank will perform, we believe that both side should come the performance. So in private bank, we are liking ICICI Bank and Kotak Bank. Now HDFC Bank is into long consolidation zone. So as of now, we are not seeing any kind of a breakout from that particular channel or that particular falling wedge. So as a value picker, definitely we would like to go long on HDFC at any low. But at current market price, the breakout level is still far. If stock price is crossing 1460, 1470 level, then that will be considered as a falling wedge breakout, and then we can expect the target of 1600. So as of now, we would like to wait and watch, and it will be the conditional buy as a technical trader. So 1460, that would be the resistance, and if that being crossed on HDFC Bank, we can see previous rally or that catch-up rally should come. Now coming to the another private bank, ICICI Bank has already given a breakout from ascending triangle pattern yesterday. So any dip towards 1060, 1070, that would be the great opportunity. Keep a strict stop loss of 1030. And looking at current market price, we are definitely expecting price target of 1150, 1200 kind of a range. And another private bank which we like, that is an Axis Bank. So on Axis Bank, again, we are seeing there is a ascending triangle pattern and multiple cluster support is there from the long-term moving averages. So considering that particular support, we also like to go long on Axis Bank at current market price, keep a stop loss of 1070. And looking at market, looking at overall chart setup, there are chances we will see target of 1200 in coming time. So there will be the preference buy. HDFC Bank will be the conditional buy, where at current market price, ICICI Bank and Axis Bank looks good.
Okay, fair enough. Let me now go across to Abhishek now, and I wanted to ask you on specifically on the hospital and the healthcare stocks. Now, why I'm asking you this is over the last few days, we've seen the Supreme Court's directive play out, havoc in this entire space. Yesterday, also, many of the stocks really fell about 7-8% in trade. Now, this is a wait and watch space for sure. 4 to 6 weeks is the time that we have to really see how the developments really take place. But what is your own sense of if this kind of a situation really plays out, and if there is a set pricing that is directed from the center? How would you really look at the hospital space? Because this is business after all, and the margins may be like, something which could be hit.
Yeah, absolutely. And see, the first thing that you have to sort of quickly check is you look at the valuations of all the frontline hospital stocks today, right? Whether it is Apollo, whether it is Fortis, Narayana, Max, all of these stocks are you know probably valued uh, pretty expensively. Now, when you have a set of stocks which is valued expensively and you have some kind of a question mark, I'm not getting into the fact whether this kind of a policy will come or not, but at least when there is a question mark that is being raised, even if the policy does not come, the intent from the courts, from the government is very clear that you need to be able to provide quality healthcare at reasonable prices. Now, if that is the case, then uh, the indication is sufficient to uh, sort of impact the margins, impact the sentiment, uh, which in turn means that there could be a significant slowdown or correction in the stocks of each of of these segments.
Okay. Kiran, to you, how are you looking at the current move in the hospital stocks? They've recovered today after the 2 days of downside that we did see. Have these dips been attractively bought into by some of the investors? Any particular stocks that you believe will be better placed to, continue to perform despite the regulatory hurdles?
So looking at hotel stock again, we are trading. I mean, we are into the March month again. The summer vacation will come, and that again the factor will start. That in summer vacation, everyone will start traveling and everyone start going for the trips and all. So hotel stocks, aviation stock, resort stocks will start firing up. So considering that particular matter, we are liking Indian hotel. So Indian hotel is in the steady uprise trend. Recently, we have seen some consolidation, and since last couple of days, we are seeing that prices are trading to the higher level and at the breakout level only. It will be considered as a flat pattern breakout. So for that matter, we are liking Indian Hotel. Yesterday, we have seen a long build up on Indian Hotel also, and the momentum indicator is also trading into the bullish zone. So Indian Hotel would be the great pick. At current market price, anyone can go long on Indian Hotel. Keep a strict stop loss of 560. And looking at that particular flag, we are expecting price target of 650, 660. So for positional target, definitely one can buy Indian Hotel.
Okay, Kiran, thanks a lot for being with us on the show. We will get back to you, in the other trading sessions as well, and hope you enjoy the rest of the Saturday as well. Many thanks for being with us onto this special trading session. Raghavendra, very quickly from a hospital space specifically, which are the stocks that you're keeping an eye out on, speaking technically?
That buy on dip because of this government news. It is a short term pain. So we recommended Max Healthcare, which is looking very good on the chart. So this is the stock which we can buy. And apart from that, one more pharma stock, Biocon. Biocon and Max Healthcare, these two stocks are looking very attractive in the healthcare sector.
Okay, Biocon and Max Healthcare from the healthcare sector. All right, with that note, thanks a lot, Raghavendra, also for being with us onto this special edition and sharing all your stock ideas and strategies in the markets. Viewers, what we'll do is we'll take a very short break. On the other hand, we will continue to chat with Abhishek Basumale on the key sectors and the themes that you should be keeping an eye out on going forward from here. Many thanks for tuning in and stay tuned because we'll be back and another half an hour to go for this special trading session, the first one to shut shop.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors. Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back. You're watching this very special Saturday trading session live on Market Today, Business Today television. I'm Sakshi Batra, and with me is Abhishek Basumale, who we are in conversation with to understand what market strategies should you be adopting now. The Nifty is comfortably above 22,400 marks, so you are at record high levels as well. Mr. Basumalik, if you can tell us any particular sectors or themes that you're now getting incrementally bullish on. So far we've actually seen a lot of sectoral rotation also take place. Several of the sectors from the PSU space have already had a dream run. But any particular underperforming sectors that now may be coming back into flavor?
Yeah, I mean, one such sector which has been underperforming for 2-3 years, and I think which is slowly getting better. A lot of the bad news or the headwinds have been priced in is the life insurance sector. Also, to an extent, the general insurance sector. So just before the break, we were discussing about these hospital regulations.
Yeah.
Now, if this sort of comes through in some sort of way, it could actually be beneficial for the healthcare insurance providers, right? Because obviously then the payout for hospitalizations get capped to an extent. So that is one direct beneficiary of something happening in this regulatory space. If you look at the life insurance segment, I think there has been a lot of tax changes, etc., which has been sort of a headwind for the sector. But I think now, if I look at all the frontline stocks, whether it is an HDFC Life or an SBI Life or LIC for that matter, they've been able to sort of face up with the challenges, and now getting much better. They've been helped by the stock market boom because of their gains in their investments. Overall, their bond portfolios are likely to do better as and when the interest rates start coming down. So overall, I think this is a sector which has been very sort of under the radar. Also, some amount of M&A has also happened. There's been consolidation. So overall, looks like a sector worth looking at, which is not in fancy. Valuations are still reasonable. So
Okay.
something worth looking for.
Any particular stocks that you'll be looking at in this space?
I'd rather not speak about stocks, but in general, I think if you pick out any one of the top ones, whether it is, an LIC or a SBI Life or a HDFC Life or ICICI Pru, all of them would, sort of play on the tailwind or the recovery of the sector.
Would you also be looking at Policy Bazaar with a favorable eye over there? Because recently they've got DAI's approval to get a comprehensive license as well.
Absolutely. Policy Bazaar again is a very interesting player in this space. It's one of those few sort of digital companies which that did its IPO a couple of years back, and where one I feel has a good business model, unlike some of the other players. Here at least they have a good business. People are aware of its brand, are ready to use it, and they've also started talking about profitability, etc. So that's a pretty interesting play, I think. Also, the only challenge with Policy Bazaar is the Bima Sugam policy that that can be rolled out, which actually could be a potential competitor to what Policy Bazaar does, because that's also a sort of a portal where you can go and buy or at least look at insurance. So. But nevertheless, I think they do have a good business. That's also an interesting play that you could look out for.
Okay, fair enough. The other segment that I wanted to discuss with you is the broader markets, the mid and the small caps. Now, there have been, enough and more debate on the valuations running ahead and, the space getting too overheated. But at the same time, there is an unabated flow from the retail investors that continues. We've also seen recently SEBI's action and SEBI's directive to AMFI to now come out with certain steps to restrict some of the unabated flows that are coming in into these particular segments because of some of the risks that may be coming in. How would you look at fresh at this point in time, both the mid and the small caps? And what would your advice be to the investors of both via mutual funds and direct stocks into these specific stock segments?
Right. So two things. One is when everybody is talking about a problem, it rarely remains a problem. So, reflexivity comes into the picture. What happens is, today, just like you mentioned, SEBI has started taking some steps. All media channels, whether it is television, newspapers, social media, everybody's talking about fraud or etc. in the mid and small caps. What that means is that people obviously will become more and more cautious. Retail investors or all investors will become more cautious, which will obviously sort of self-limit the problem. So I don't see, honestly, that there is going to be a big problem in the mid and small caps. That's one. Second is, I'm also not very, sure that the valuations of small and mid caps are way out of whack. I don't think so. There are pockets of problems in terms of valuations or in stocks that have run up, but that is there in any bull market. The good part is that, again, like you mentioned, there's been sectoral rotation which is continuously happening, which is good in the sense that you're not seeing very deep-seated froth getting into one particular sector, right? So, for example, PSUs have run for some time, then it takes a breather. Railways did extremely well for some time. I think for the last couple of months, the railway stocks have not moved. And this is happening with sector after sector. There is a healthy sectoral rotation which is happening, which I think is good for the overall markets. I don't see a huge amount of froth that is getting built up.
So on this itself, Mr. Basu Malik, could you get us a sense of how should one look at these outperformers as well? Say PSU banks, defense, railways you already pointed out, maybe the power space as well. Now there is renewed interest. People are scouting for solar names, for example, renewable names because of increased government's focus here. These sectors have got a fair share of re-rating. But what next for somebody who's looking at a long term, say 3 to 5 years? How should anybody look at a fresh entry points in this?
So the basic thing to do is whenever you're looking at a company, just try to understand what business it can have over, say, the next 1 to 2 years or 3 years. Uh, Roughly, I mean, you may not be able to get the absolute right number, but directionally, if you understand that, okay, today it is doing 100 rupees worth of PAT. In the next 3 years, it can go from 100 to 150 or whatever that number is. And then, see what exit multiple, possible exit multiple could be. Be slightly conservative and then see that, okay, what could be the price, exit price that you can get 2 or 3 years down the line, and see how much variation is there from where you are today. In most likely cases, what you will find is uh, the stock price is already incorporating 3 years, 4 years, 5 years of results already in the price. Which what that means is that you cannot be very gung ho and invest everything in those stocks. What you probably need to do is go slow, uh, and the other downside to this is that if the stocks keep going up, which can definitely happen in a bull market, in a frenzied space, a lot of times what also happens is we as investors, we will underestimate the growth potential, right? Then you'll miss out on the rally. So one good option is to slowly and incrementally put in capital. So more in an SIP mode or more in a staggered manner over the next 3 months, 6 months, keep adding to your portfolio, to the stocks that you like.
Okay. The other space that I wanted to discuss is the auto space as well. Yesterday we saw, most of the companies report good set of sales numbers as well, be it from the four-wheelers or the two-wheeler side as well. How are you looking at the auto segment as a full, both auto OEMs as well as the ancillary names as of now?
I think autos again should do well as and when the economy starts recovering, especially two-wheelers. I think four-wheelers have been doing well for a while now. Uh, Ancillaries are something which I am more, keen on, simply because it's not only a domestic play. The ancillaries are a global play, so they benefit both from the India auto cycle as well as exports in a large number of cases. So that is sort of a double benefit for investors. So, and you have a lot more options to choose from in ancillaries rather than the actual auto manufacturers, which are probably, I mean, how many listed auto manufacturers do we have? I mean, less than 10. Whereas we probably have around 40, 50 auto ancillaries. So a lot more choice in terms of auto ancillaries. So I would be more keen on auto ancillaries than autos.
Okay, fair enough. Well, on that note, thanks a lot, Mr. Basu Malik, for being with us on this show
Thank you.
and helping us, get a sense of which are the pockets to be kept an eye on and the strategies that investors must follow, even at record high levels, the way to spot, specific value buying ideas as well. Many thanks. Always a pleasure to host you on Business Today Television. So the markets are soaring higher. You can see a 22,410 on the Nifty. It's 0.3% uptick that you can spot on the Nifty even as of now, and a whole host of sectors that are really looking very, very positive. Now, the good part is that along with the secondary markets, even the primary markets are have been, a buzz with newer IPOs really hitting the street. And the latest one to hit the street was also the Muka Proteins IPO, and it's already got a huge subscription from its retail investors portion, as well as the other portions for reserve for NIIs, as well as the QIB portion. Now, to discuss more insights from this 224 crores IPO that's open for investors, and now joined by the top management of the firm, Mr. Kalandan Mohammed Harris joins in. He's the CMD and the CEO of Muka Proteins. Welcome, Mr. Harris, and thank you so much for taking the time out for this discussion on Business Today television. To begin with, I want to understand from you, as far as this IPO is concerned, what is the objective? Of course, it's a very attractively priced IPO, just 26 to 28 rupees. And therefore, we've seen a huge investors' interest and a larger participation that has accommodated a lot of requests for the bids that have come in. Tell us what is the objective of launching your IPO?
Good morning, Sakshi. First of all, I thank you, Business TV, to join me for this show. Well, this industry is first in the sector. I mean to say, we don't have a peer in terms of a competitor here. So we are first to launch this fish protein-based, product into the retail markets. So I've been this industry has been started from my grandfather since late 1960s, and thereon he started this industry, and my father started exporting in 1970s. Then I joined in 2002, where we started the first steam-dried fish meal in India, because India was importing fish meal the late until 2002 from various countries and paying huge duties. So in 2002, we started the international standards, and we made a lot of innovations, R&Ds, research and development on this. And we got through in 2002, and fish meal import was stopped 100%. And we are the part of Make in India concept as well. Even the Prime Minister's view on Prime Minister Matsya Sampada Yojana, and we are the part of the Brew Liberation 2.0, and it's a sunrise sector as well.
Yeah.
So,
Absolutely. So it is a very interesting sector, and you rightly pointed out that there is no direct peer so you're going to be one of the first players who would be listing on the exchanges from this segment. And give us a sense of what your business is like. How do you make money in terms of your revenues? What are the various segments that you garner your revenues from, the revenue market share? And if you can tell us the way going forward, what is your vision on the terms of expanding your income going forward?
well, if you say fish meal is one of the key ingredient, the fish meal is used in feed meal, in like pet feeds, fish feed, shrimp feeds, animal nutrition it is. So without fish meal, there's no other alternate for any feed manufacturers. So even the fish aquarium feeds, where you see fish meal is at 30% there. And fish oil, again, it is used in the nutraceuticals, like the omega-3 essential fatty acids, widely used in that. There is a high growth. So in future, we are planning to install and manufacture the omega-3 as well. So that would be the first in the country to start with. And it is also used in widely used in the leather tanning and the pharmacies and so on. And also in terms of fish soluble paste, what we manufacture out of the waste of fish. So where it is again used in the fish feed as an essential protein source, and also it is used in the high organic fertilizer. We have a huge market in the US, and also this fish oil is widely used in all the nutraceuticals across Europe. So we are the largest supplier there. And we are also into the other segment is the insect protein, which we have made in the recent development. We are the first only start in the large levels of this insect-based protein, wherein the food waste is being converted into protein. So this is adding a circular economy as well. So the landfill also is been avoided, and a lot of erosion, pollution, methane has been eradicated through this, and we contribute to the sustainability as well.
Okay. You also export to a lot of countries. I think you have presence in about 10 countries or so. Tell us what your expansion plans would be currently. How is your geographical mix placed at, as in how much revenues do you get from your exports and from your international presence? How much does it come from your domestic market?
Well, we almost export about 10 to 20, 25 countries in general, but major
Okay.
is Southeast Asia, Europe, US, and Gulf regions. And we are diversified across the strategic locations of all the coastal regions in India and in Oman. For Oman also, we have a strong presence there, wherein the resources are huge and the protein levels are also huge. And if you say oil content is also a huge. So that's a diversified sector we are, and every coastal regions we have set some blending unit very near to the ports. So we see a lot of logistics expenses incurred in all our operations. And also, if you say the market in future, so in future we are planning to have start this nutraceutical industries and some more value added things. Year on year, we have been adding on a lot of R&Ds because it's almost 6 decades in this industry we have been. I'm the third generation in this.
Yeah.
So we have a lot of expertise. Now you will see this insect protein. This is the first of its kind in India. In Asia, you can say. Now Malaysia has adopted this technology, and Europe it is widely used, like the Cargills and the Nutricos and all these players have started. This is the future of the protein sector in future. So on a sustainable way again.
Okay. Tell us a little bit about your financials, the way your operating margins are currently, the way your profitability has grown, and where do you see that going forward over the next 1 or 2 years?
Yeah, well, there will be a lot of revenues adding in because all our capex is being completed. That's why you could see some books. It's not a really debt actually. Uh, we have only the working capital. We don't any other entities. We have hardly a few debts. I mean in terms of term loan or something, but only we have the debts is against the stock what we have. But we don't have a physical debt as such
Okay.
in any industries. So future, we are only depending on the OPEX now. So CapEx part is almost finished. So maybe
Okay.
only the R&D and these things will be, and the major portions, as you see, it is kept for the working capital and the entoprotein, the subsidiary, what you see, they have allocated some funds. So future, it will be a growth oriented strategy. So whatever. So again, we are doing a lot of, getting some mechanized fishing vessels in Oman, so that will add a lot of revenues because we've been buying the raw materials. So when we have the own fleets with the modern technological, so we can have more margins and so on.
Okay. Also, tell us in terms of your market share, sir, since you are the largest player, you claim on your website as well in this entire space. What is the current market share that you have? Who are your biggest other competitors, and how do you expect to continue to gain market share going forward?
Well, we almost contribute about 30% of the India's production, and also we are the largest exporters ever since 2012 until now.
Okay.
So year on year we are growing, and we've been awarded from various empedas or all these sectors. So hopefully in coming days, when insect protein, we are also scaling in that level. So the margin,
Right.
the dramatic changes you can see in the insect protein productions. Also, we've been doing a lot of R&Ds on the current production. Like we have a technology for increasing the protein with the extraction source, which we have developed first in India as well, 3 years back, and it is also doing very well. So, yeah.
Okay. And who are your top clients, sir? Could you tell us? I believe that you have a long-standing relationships with some of your top clients who've been staying with you for a long time. Who are your
Yeah.
top clients? What is the client concentration like? And are you looking at adding some more clients from some geographies?
Well, in India, Avanti is our biggest client. So almost, Avanti is the largest in India, probably largest in Asia in terms of production of feed manufacturing in India. So we are the main suppliers to them. And CP Aquaculture, it's the world's giant. They own a big share in the market in international level. And we have Cargill's, we have Godrej, we have GC Lakmed, and in China we have the China Feed Producers Association. It's about 50 plus client base we have across the world.
Okay. And going forward, sir, how are you looking to expand your footprint?
In front of fish meal or the subsidiary, what do you mean?
In your maybe your M&A opportunities, your growth opportunities, are you looking at organic or inorganic growth now?
Yeah, so it's going organically, Sakshi. So if you say in the way you see our journey since 1960s to 2024 now, so we've been organically growing, and if you say in coming years, you will see a lot of good numbers across, because as you say, as I mentioned you about the capex has been completed, and now we are focusing on the OPEX side. So there will be a phenomenal growth if things worked out, and even the insect protein, it's been large success of our scientists who have been working hard on this. They cracked the deal, and it's being phenomenal growth where we can see this what we are having is a pilot project now, and now we scaled into the commercial. And now we can do any amount of expansions across. We've been invited from the various international, in GCC also we've been invited to start. So first we thought of starting this footprint in India, then we move ahead of India. So
okay, well, all the very best to you for this IPO and for your listing on the exchanges. Many thanks for sparing time to speak to us and explain your business strategies and the growth opportunities that you're looking to tap. All the very best to you, sir, and thank you so much for speaking to Business Today TV.
bye.
All right, with that, let's quickly look at the markets now. They're almost shutting shop at this point in time. So the first session is nearly over, and you can see record closing highs for the first session. There will be a 1.5 hour break now. 22,395 on the Nifty, 56 points higher, 0.25% of an uptick. The Nifty Bank nearly flat with just a positive bias. 47,308 can be seen on the Nifty Bank. The stocks that have moved up towards the closing is Hero Moto, Tata Motors, Apollo Hospitals, Dr. Reddy's, Divis, Cipla. So the pharma, the underperformers of the yesterday's trading session are coming back in flavor. Asian Paints, L&T, Wipro, LTI, Mindtree, they're coming back in flavor. You also have SBI that's pulled up in trade, Coal India, ITC, and even the insurance players like SBI Life, they're picking up pace. The IT majors like Infosys, that's the one that's picking up pace, TCS as well. The broader markets are taking away the show today. 49,114 for the Nifty Midcap 100 Index, 0.6% higher in trade as well. The other sectors that have moved up, IT, of course, 0.5% higher in trade. That's the other sector that's moved up, along with pharma index as well. A lot of moving parts in this market. The metals have moved up as well, 0.6% higher in trade for this one as well. A whole host of sectors really looking at positive closing at this point in time. What we'll do is we'll wrap up this very special trading session. We will join again at 12 p.m. once the half an hour of that edition is over to wind up this special trading session for you. But looks like this special trading session has also turned out very positive for all the investors, with record highs continuing on both the benchmarks, Nifty and the Sensex. Many thanks for tuning in. Up until then.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
So guys, the craziness of the Mobile World Congress is still going on. There was so much content I tried to cover, but again, I had to come back to my hotel to talk about